Hub Radio Phoenix is an internet-based podcast platform providing numerous special interest programs reaching over 100,000 viewers per week. Hi, I'm Ron Ludders, executive producer of Hub Radio Phoenix. We don't pretend to be journalists, but we're not afraid to say what's on our minds. We thank you for watching, liking, sharing, and subscribing to Hub Radio Phoenix. Stay tuned, stay faithful, as the best is yet to come.
Welcome to Backstreet Gossip, current events, news talk, and political commentary. Now here's your host, Ron Ludders.
Well, thank you. And I'd like to thank our sponsors, which you saw before the show, and they make this show possible. So those of you that are close at hand, please support them. Welcome to the show tonight. It's the 13th of September. After a weary weekend of listening to the replay of the 9/11 events of 20 years ago, I think it might have been a little bit overdone because that's all you saw all weekend long. And quite frankly, it was a sad state of affairs, and I've seen too much of it. And so we're going to have a different type of show tonight. Almost everybody in the world has spoken about the 9/11 event. We're not going to do that because I know that you, like us, have seen enough of it. Tonight we have Mr. Ray Michaels.
Hello, everyone.
And Peter Martin, or as we like to call him, Martin Peters.
Thank you. Thank you very much. Nice to be here with you guys.
And we saw you on your ad.
Yeah, I guess I'm on the ad as well. Yes, wow.
You are a superstar.
Amazing. I would have never thought that.
You know, there's a lot of things going on here, and the one thing I saw something I'd like to just repeat it, and that is that President Biden's performance over the last 9 months or 8 months has made Jimmy Carter look like Winston Churchill.
Yeah, without the cigar.
Without the cigar. At any rate, so we're going to talk about tonight, we're going to talk about something that finally we've gotten Peter Martin at what he does professionally.
Isn't that amazing?
It is.
Yeah.
Of all the things you've done, so many wonderful shows.
Well, Peter, you're so passionate about so many things, and I'll tell you, when you do research, you dig deep.
And he's very thorough,
yes,
very thorough.
Thank you very much. Yes.
But we have some things here that should scare the bejeebers out of everybody here, and that is the stock market and what's going on with the stock market. It's been steadily climbing for many, many, many years. And I remember back not too long ago under Obama when it was about 14,000, and now it's about 34,000. So it's really, really climbed. But you're telling us to be a little careful now.
Yeah, we need to be careful at this point, and the main purpose of today's show is to provide a warning about what's going on in financial markets, not just the stock market. We will address a little bit precious metals tonight, and most certainly the world of cryptocurrencies, which I know has about 30 million Americans interested in it. So we will certainly address that as well. Starting out the show tonight, when I was last here, let's just say for my own show, not helping you with another show.
Seems like you're here all the time.
Yes, once in a while, yes. But July 7th, we talked a little bit about the globalists. And we mentioned a few names. We mentioned Klaus Schwab, for example.
Yes.
And in past shows where you were here, Ray, we certainly talked about Bill Gates. Mm-hmm. I just want to ask you guys, and I just obviously mentioned two globalists right there. If I ask you guys, who are the richest people in the world? What are some of the names that come to mind?
Well, you'd think George Soros, right? He's
a
billionaire.
Sure, billionaire.
Bill Gates, of course.
Yes.
You think Bezos.
Absolutely.
Right.
Yes.
Rockefeller.
Right.
Yeah.
You think who has Hathaway, Berkshire Hathaway? Warren Buffett.
Warren Buffett, for sure.
Hey,
Yes.
you know, before you go any further, some people are tuning in for the very first time, and Ron, our audience continues to grow and grow and grow.
Yes.
So this may be the first time that they see Peter Martin here. Peter, tell us a little bit about yourself and what you do. And so when we put all this together and you show us the research, we know that this is what you do.
Yeah, this is what I do, yes.
Yeah.
Thank you, Ray, yes. It's a good point now that we have millions of listeners and viewers, yes.
Yeah.
I'm Peter Martin, and I am a certified financial advisor in the Phoenix metropolitan area.
He is certifiable, Ray.
And
I thought that was just during the show.
yeah, just during the show, Ron. And I do have clients mainly in Arizona, but also in other states and a little bit globally as well. So I have been doing this for 16 years now. I began my working years actually as an engineer. And my specialization within engineering was cycles, more or less. There's a fancier name for it, but we don't
And we're not talking about like bicycles.
No,
right?
no.
Because you have to
no.
engineer those too, right?
Structural dynamics, system dynamics. So basically the study of cycles and how things go from A to B and then back to A and that kind of thing. And so this has translated very well into my knowledge of economics and also into the world of finance. So some of that we will actually bring to bear today. We're going to look at an indicator on the stock market that I developed myself over the course of many years. It took a little bit of luck, a little bit of research on some old investors from a long time ago, and it's going to be a lot of fun. It's going to be fascinating to see what it reveals.
Awesome.
So, but yeah, you guys mentioned some of the wealthiest people in the world who...
Queen of England.
Queen of England,
Rothschild.
yes. Yeah, you
the
guys...
Catholic Church.
Elon Musk, right?
Yeah.
Yeah, these are the names that come to mind, okay?
Well, they're out there in the public eye,
Absolutely.
right? We hear their names all the time.
When we see the list of the top billionaires, this is who comes to mind, and this is who's listed in magazines as the wealthiest people.
Right.
Well, guys, I'm here to tell you, those people, most of them, that's tier number 2.
So they're not really the wealthiest?
That's correct.
They're only the people out front. They're
Exactly.
like the poster children.
They're the
Yes.
wannabe quadrillionaires.
Yeah.
Is that an actual denomination? Quadrillion? What's after
I made that
what's
up,
after
but
billion?
That means a
Trillion?
lot of money.
Trillion,
Right.
and then quadrillion.
Quadrillion.
That
And
means they
what
have a lot of money.
we're going to look at now, actually, funny you mention that, Ray, is we're going to look at some families where the wealth is in the quadrillions.
Now, is this money that's circulating? Is this money in assets? Is this
Most
money...
of it doesn't circulate. Most of it is in assets. Yeah, as you would imagine.
Right.
Yeah, because otherwise our pricing would be
Yeah,
very
because
different.
they when we're talking about debt and the U.S. debt, they said that even all the money that is available can't pay
Right.
the debt,
Right.
right? So
Exactly.
it would have to be in assets, but this can't be new money then, right?
Oh, no.
Probably old.
No,
old,
let's
old.
let's take a look at it. Neil, if we could go to slide 1, that'd be great.
This is exciting. I'm
Yeah.
telling you. Wow.
And so here they are, a lot of names that many people wouldn't even recognize. But I think it's important to finally shine the light on some of these families.
Where's
And-
the house of Uncle Ronnie?
Yeah, there you go. That's what we need. Yes. Well, I think we would all be better off if there was a very
You know-
wealthy house of Ronnie.
Peter, there are a couple names that, look familiar, like House of Astor. That looks familiar. DuPont,
Rockefeller,
that looks familiar.
Rothschilds,
Onassis.
DuPont.
Yeah,
Kennedy.
and then Medici. That's Estee. Those are fairly common, but some of the Lee. That's an unusual one.
Yeah, Chinese. Yeah.
Wow.
Yeah, it's a Chinese
Freeman Kennedy, you
family.
see Kennedy.
Yeah.
Well, now, when you say house of, what does that actually mean?
Well, some of them I labeled that way. I just made it even for all of them. Really, it's the ones on the left that are called the House of, but I thought I would give them all the same kind of royal title for all of them. So, but a lot of this, especially on the left, is wealth that has been around since it actually was pulled out of the Roman Empire.
Wow.
So this has been passed along generation after generation, and
For
you can
2,000
imagine
years.
How it grows and grows and grows over the years. And so it's important, I think, for our audience to recognize these are the people who are pulling the strings.
Now, do they know each other? Do they get together?
Sure they do.
All right, so tell us what type, I mean, if you were part, House of Conti, and then you knew the DuPont family or the Onassis family, do you gather together? Do you meet once a year?
At times they do, yes. Yeah. In fact, they intermarry from time to time. There was
Kennedy Onassis.
Onassis and Kennedy, of course, and then there was in the last 10, 15 years, there was a marriage between a Rothschild and an Aldobrandini. So they keep it within the group, because why mingle with the lower people,
the little
like
people.
us? Yeah.
So
exactly.
so they would actually get together as a group. Is there anything? Is it called anything? Do they name it?
There are various
secret
names.
Meetings?
Secret meetings. I wouldn't presume to know what they.
You're
call.
not invited. I know.
Yeah.
Ron Ludders. He's important. Are you invited to any of these?
Rondini.
Yeah.
House of Rondini.
As I often explain to my clients when I make forecasts, and they ask me really deep questions, like sometimes they ask me a little bit more than a client should normally ask, and sometimes my response is, folks, they don't invite me to their meetings in Davos.
So they're not all part of the Elks or the Moose, right?
Exactly.
The Moose Lodge? Okay.
If they did, you were the chauffeur, huh?
Yeah. So I thought, our audience should know who's pulling the strings, because I know there's a lot of people in the audience who are blaming Biden or blaming Trump or blaming Merkel in Germany or blaming Macron in France or blaming Trudeau in Canada. And in reality, these people are puppets. And the strings are being pulled by the puppet masters. And I think it's important for our audience to know who those puppet masters are.
Would you consider this part of that whole idea of one world government?
That's what they're after, sure.
That's what they want.
That's what
and
they
so
want.
What is standing in their way?
More power, more control, more subjugation over us.
Us meaning
regular
we the people?
Regular people like here at this table.
So the Constitution of the United States must not be very favorable in their eyes.
Absolutely not.
Individual rights,
No.
individual liberties, individual freedoms.
And national sovereignty is another thing they want to knock down, because that stands in the way of a global government. Yes.
So state sovereignty under a national...
Right. They want to get rid of that. Yes.
Wow.
Yeah.
They seem to be going after it.
Well, Ron,
certainly.
you are very well versed in history. There's no other country in the world that has ever existed like the United States of America. Now, some people say Canada is very close, but I think there's still a lot of socialism there. They said that Australia was very close, but we see now
What they're doing.
that is not the case. New Zealand. I don't think there's any other country in the world that is set up like ours to give that same individual rights, freedoms, acknowledged that those come from God.
We're very fortunate.
Yeah.
And yet, gentlemen, we're turning into a fascist nation very rapidly under this current administration.
It's because our youth, our children, our young adults are not being taught how valuable what we have is.
That liberty is a value that you cannot place a monetary value to.
Yeah.
Yeah. And speaking of teaching the youth, where do the youth learn a lot of things that they learn from the media, right?
Yeah, I'd say from their school, right?
Yeah,
From media, from the internet,
Yeah.
motion pictures they watch, television shows they
Absolutely.
watch, right? Yeah.
Yeah, mainstream media is a big deal, and we should take a look at that. Neil, let's go to slide number 2, please. And this gives us an idea of what's going on in media. And as our viewers can see here, you can really lump a great deal of media into just a few silos. And in fact, it's only 6 families that own all the media outlets on this page right now. The purpose of the whole thing, and there is a purpose, is to divide society. Think about it. The globalists are only 3,000 families or so, whereas we are 7.7, 7.8 billion. The only way for us to be dominated by such a small group is for us to be divided. So the purpose of this media structure run by only 6 families is to divide us. For example, Fox is a wonderful example. Fox caters to conservative viewers. Okay, who runs Fox? It's the Murdoch family. Okay.
Very well-to-do family.
Very well-to-do family, and the younger generation of it is not conservative. So why do they run a conservative-leaning media outlet like Fox? Well, they run it to cater to conservatives. They definitely want the conservative viewership, but the slant of every single story is to sow a dislike and even a hatred of liberals. Even though the conservatives and liberals in our society probably have more in common than they actually do against one another, but the purpose of Fox is to sow that dislike of one another. And then, of course, you got CNN on the other side doing the same thing with liberals, causing them to dislike conservatives.
So it would almost be like a professional team that is in the final championship, and one person owns both of the teams.
Yeah,
Right?
exactly.
Either way, they're going to win,
Yes.
but they cause a discourse in the
Yes.
meantime.
Yes.
Yeah.
It's a divide and conquer strategy. That's what we're looking at with
Now,
our
you
media.
mentioned 6 families. So I see AT&T, Walt Disney, Comcast, Viacom, CBS. What is the 6th one?
Yeah, the 6th one is mixed in there somewhere. I'm not saying that each one of these columns is one family. That's
right.
That's not quite how it goes.
You're just saying that AT&T owns all of these, but they may
Right.
have several owners for that one.
Right. Exactly.
It's amazing, too, because when you look at, like, the Walt Disney Company, growing up, Ron, you remember this, right?
I do.
You were there when it was first opened, Disneyland, right?
Yes.
Everybody thought he was crazy. Why do you want an amusement
July
park? They're all
16th,
dirty.
yes.
But he did so many things. I'm not saying he was a perfect guy, but he definitely catered to the kids. And look at how much it's changed
Oh my gosh.
wow.
from when we were kids. And you
Wow.
could trust it. If it said Disney, and
Could
that's why
trust
they
it as
created
being a
Touchstone
family.
Pictures. You remember this. When Splash came out, it wasn't released under Disney. It was released under Touchstone, even though Disney owned Touchstone.
And I believe now that's Pixar.
Well, Pixar was another studio that they bought, but that was, remember, Touchstone Pictures was
Yeah.
Disney, but when you said Disney, it was kids. It
Yeah.
was for the kids.
And
Nowadays,
Mouseketeers.
not so much.
Not
Annette.
so much, yeah.
Mickey.
Cubby.
Mouse.
I only saw the reruns, Ron. So.
Okay.
Well, it's time for us to take a look at what these globalists are doing because, as I revealed when I was here on July 7th, there is definitely frailty and fragility that's been developing for almost 2 years now in our financial system. And so it is coming to a time when the globalists are going to have to engineer what they like to call, what Klaus Schwab likes to call, the Great Reset.
And you've heard this. I mean,
Sure.
it's in Canada they say it, in
Yes.
Australia they say it, in England they say it, here they say it. that is a tag term. So say it once again so that
Yeah.
everybody, when you hear this tag term, it's not just here in the U.S., it's globally.
Absolutely, yeah. Just go on to Google or DuckDuckGo or Yahoo, type in Klaus Schwab, The Great Reset. I think it's even the title of one of his books.
Well, there was was it Agenda 21?
Agenda 2021, Agenda 2030. Yeah, we've seen all sorts of these things.
So, this is strategic. And if these families go back hundreds and hundreds and hundreds, maybe thousands of years, a decade is really not
Right.
too long to wait.
Right.
Right?
Yes.
Okay.
Yeah. So let's take a look at my personal indicator for the stock market. This is important. This is something that has consistently forecasted a stock market crash in the past. In fact, when I go back and I look at the record, there hasn't even been a false positive. In other words, it has never said, oh, there's going to be a crash, and then there wasn't one. It actually has a perfect record.
And this is what you created?
Well, with some help from some old investors, and I'm going to bring up the slide now. Neil, number 3, please. So now our viewers will see some grayed out areas on the top, on the right, and a little bit in the middle there. That's simply because this is a proprietary indicator. I'm not going to reveal all my secrets tonight. But in general, I will just say that there's a green line and a red line that I think everyone can see. The red line, very simply, is the S&P 500. So the 500 large cap stocks in the United States.
Okay, give it to us one more time. The green is the...
The green I haven't labeled, and
Okay.
I'm actually not going to, but what I will say is it is a measure of breadth in the stock market. So not looking just at a narrow selection of stocks like the S&P 500, because we have almost 9,000 stocks in the U.S. So,
Right.
so if we look at the S&P 500, it's a small sliver of it.
Right.
Okay, the green line is broader than that red line, which is the S&P 500. And what I want to definitely give credit here for is the 3 guys who are long since deceased, but the guys who inspired me. And our listeners who are investors will know these names. These are legendary investors. W.D. Gann, Bernard Baruch, and Jesse Livermore. Jesse Livermore at one point was one of the wealthiest people on earth. These guys all were able to see crashes before they happened. And they wrote accounts as to what they were looking for. What was it that tipped them off? And the way they wrote about it, they were all saying, well, you could see that the internals of the market were breaking down before the overall market would break down. And it wasn't really much more descriptive than that, other than saying there was a kind of a misalignment between the narrow view of the market and the broader view of the market. And so I thought to myself, okay, can I use this somehow? Can I use this knowledge from a century ago or more to somehow look at something in the modern day that would give me a view into what these guys were seeing in those famous crashes like 1929, 1907? What did they see? And so I look at the green line and I look at the red line and I run a correlation between the two. That's the black line underneath. And when that black line goes under a certain level, I don't know if it's cut off for our viewers, but over on the right, there's a 0.75 level. And when that black line goes below that level, I know that we are headed for something significant, assuming the stock market has not begun to dip already. Okay? So you see a lot of examples along the way where it dips and there isn't a crash. That's because the dip in the black line occurred at the same time as the dip in the red line. Okay? What matters on this chart is black line descending, red line doing just fine. When that happens, it's an excellent predictor of a crash. I mean, truly excellent. And you can see we have that now. You see the red line over on the right doing just fine, no problem. That's the S&P 500. But you see the black line, the correlation between the red and the green is plunging underneath. That's my indicator. That's what tells me there is a stock market crash coming, and it's not too distant in the future.
So when you say crash,
Yeah.
it's a downfall of about how much percent?
I would say, based on this indicator, it should be at a minimum 25%.
Wow.
25%.
Yeah.
So it's not when the market takes a dive like that, it's not always a bad thing if you are prepared for it.
Right. Exactly. Yes. And there are, of course, ways to make money on the way down, which I fully intend to do for my clients. So, yes, you can make money in an up market. Most people know that. And you can make money on the way down.
Can you do you accept checks, Ron? Can you write him a check?
I already have.
All right. Well, if we could go back to the chart real quick, Neil, 1 second. I want to make sure that everyone understands that in a stock market crash, money is not destroyed. Now, as we go through the presentation this evening, you actually, as viewers, you are going to see some things that later on down the road can literally destroy money. Bankruptcies, defaults, for example, destroy money. Stock market crashes do not destroy money. What's important here is that money in a stock market crash changes hands. Typically, it goes from smaller players to the globalists, who we just talked about. Okay? So,
Are they controlling any of this, the globalists?
As we will get into, you're going to be amazed, Ray, at what they're doing to set the stage for this. You'll be astonished.
They're puppet masters.
Yes.
All right.
And I want to say, before we continue off this slide, it is important to note that we might get one last shot in the arm for the large cap stocks. So you might see the Dow Jones, the S&P 500, they might make one last run upward here before a big move down. I just want to make sure that our listeners are aware, whatever upside is left, it is very small compared to the downside that will come afterward. Okay?
Okay.
So, let us take a look at slide number 5, Neil. Okay. This gives you an idea of where we are in terms of valuation. You see the black line, and by the way, this is going back to 1952, so it's a long-term chart. The black line on top, that's just the stock market, the S&P 500, okay? Underneath is a blue line that fluctuates a lot over time. The blue line is stock market valuation compared to all assets out there. So when you see that right now over on the right, you see the blue line at the highest level ever, what that means is the stock market valuation right now in comparison to other assets out there like real estate, bonds, precious metals, cryptocurrency, you name it, everything. The stock market is at its record valuation now since 1952. Secondarily, I also want to mention there's another ratio that a lot of investors look at. It's called the price-earnings ratio. Basically, the price of stocks divided by the underlying earnings of the companies. That is also at a record pre-crash high right now. So the stock market, by a lot of measures, is at a record high valuation right now. That should not fill people with a lot of giddy feelings because the pendulum usually swings the other way.
Now, I'm curious. So we're looking at the blue line, and right about 1972, 73, it looks like it took a big dive, stayed down from 72, 73, all the way up until about early to mid 90s.
Yes.
So you're talking about a 20-year where it was way down, yet the stock market, the black line,
Yes.
stayed consistent.
Stable.
It did move up, yes, as did the blue line. Just because the blue line starts from a low level, it was increasing from about 1983 until the year 2000. Okay? So basically what it says is that from, you mentioned, Ray, you mentioned 1972. Let's even go to 1969. From 1969 until 1983, that blue line is declining, which means stocks compared to other assets out there were losing value in that time. But from about 1983 until 2000, stocks were gaining value relative to other assets like bonds, real estate, and so forth.
Right.
Okay? And right now, you can see we are at the record high valuation for stocks relative to other assets.
You know, it's amazing because up until about from 55 to, or 1950 to about 1995, the stock market stayed pretty consistent. I mean, you had small upswings until you got right about there, and then it
Yeah.
seems like it took a big upswing.
Although if we could zoom in on the late 60s to 1980, Ray, I don't think you would have enjoyed that period. It was very choppy, actually. Yeah.
Okay.
From about 66 to 1982, the stock market actually went nowhere. It was the most depressing 14, 16 years there could possibly be.
Do you think it's because the kids who were growing up, or the young adults during that time, were just everything was free love, let's do this, a tie-dye, and they weren't really interested in
It's a cycle.
making some money?
It's actually a cycle, Ray. There's times when stocks are in favor and there's times when they're out of favor, and it usually alternates in something like 12 to 20 year stretches.
Similar to the real estate market.
Similar.
Well, Peter,
Real estate's a much longer cycle.
That's what I was going to
Yeah.
say. Speaking of that cycle, the real estate of late has been very high and is still climbing.
Yeah, yeah,
And so its value is staying very, very high
yeah. So far,
so far.
yeah.
I'm not sure that's going to tumble. I mean, we've got.
I didn't want to address bonds or real estate tonight, Ron. I
Okay.
think maybe a future show would be appropriate for that. For tonight, what I want to alert our viewers to is stocks, precious metals, and cryptocurrency.
Cryptocurrencies.
Those are the ones who, in the near future, we're talking weeks, at most months, that is what people need to seriously watch out for. Bonds and real estate could actually get a little bit of a shot in the arm from a stock market crash, because money has to go somewhere.
Right.
Remember, we talked about how money is not actually being destroyed in a stock market crash.
exchanged.
It's going somewhere else.
Right.
Okay? So at some point in the future, hopefully you'll invite me back, Ron, and we can address bonds and real estate.
Depends on how much money I lose in this venture.
You're holding him to the fire on that one.
Holding your feet to the fire.
All right.
Yeah, yeah. So, all right. Well, we did a good job with that. So, let's take a look, Neil, at slide number 4, if we could. And I want to address, I didn't have this chart on July 7th when I was here, and this is a very good diagram that really shows how the central bank, which is we call the Federal Reserve in the United States, how it creates problems that then in the future enrich itself. So if you start in the middle, the central bank creates money supply. Okay, they do. They print dollars. Okay, what happens then? Well, what winds up happening is interest rates wind up being lower than the natural rate. And this is a key thing within this understanding is normally you would have just borrowers and lenders. Well, if you introduce a central bank, all of a sudden you've got additional supply of money. And when you have more supply, price goes down. In this case, price is the interest rate. It's the price of money. And that's where the problems come from. When interest rates are lower than they should be, which the Federal Reserve, that is what they do on a guaranteed basis. When interest rates are lower than they should be, you have the looper on the left, which is where you get bubbles being created. And then you have the looper on the right, where those low interest rates cause the rise of debt. People borrow more. Low interest rates means easy financing. And of course, people save less. Why would they save as much if interest rates are lower than they should be? They're not being paid as much on their deposits. And so it skews the national balance sheet.
You know, one thing that Ron Paul, who was in Congress for many, many years, this is Rand Paul's father, he has been wanting to audit the Fed for years because, you know, the average person, when you think Federal Reserve, right, they make the money, Federal Reserve note, but it's not federal and it's not a reserve.
Correct. Yeah.
And he wants to audit it. He's been calling that for years and years.
And,
I don't know if it's ever going to happen.
It
should be
well,
audited. Absolutely.
Being an auditor, Ron, yes, of course you'd want it audited. Of course.
Well, you know, when you have something that's supposed to stand behind your currency, and of course we know originally it was gold and silver.
Gold standard.
Then it was the full faith of the U.S. government, which is
Nancy Pelosi.
quite frankly laughable that the full and faith of honest government is behind the dollar today. I would not be, and am not, real sure about the dollar's future.
Well, hold on, Ron. You might become a lot more certain as we go through tonight's broadcast.
Make me feel good.
That's going to be the big surprise today. I think maybe some people suspect problems in stocks. What they don't expect is extreme strength in the dollar, and we're going to get to that.
All right.
But what I want to finish off here on slide number 4, Neil, is just as these two loops come together at the bottom, it creates a perceived need for greater money supply to prevent a downturn. And that just puts the Fed right back in business. They're printing more dollars then. And the important thing to notice here is that every time they print a dollar, they make money off the interest that is owed on every dollar that they print.
So it's really a perpetual cycle that just keeps money constantly flowing back to them.
Yes, that's what it is.
It's a
exactly.
nice game if you could. If you could print money.
If you can
Sweet.
be running it.
Sweet game, yeah. Press a button and mint money.
Saturday night,
Yeah.
there's no lotto. You just keep printing money.
Sometimes I get money from the bank. The ink is still wet.
Yeah. But there comes a time after about 40, 50 years when the financial system runs into trouble and some frailties start to emerge. And it requires the system to be reset. And that's because of the distortions that you see being created on the chart on this slide. So Neil, let's go to slide number 6. And I don't want to go through every one of the items on this because this was a slide I put up already on July 7th. But what I want to focus on and make sure that our listeners really pay attention is that if you look at number 1, this was this was 2 years ago, actually. In September 2019, we had something called the repo market crisis. And most people don't know about it. Financial people know about it. Basically, the banks stopped trusting one another. And the Federal Reserve literally had to jump in to loan cash to these banks who would no longer loan to one another, most likely because debt is too high. Literally, the banks don't trust the other banks that they're going to get their money back. So we got to a point in March of 2020, right at the heart of COVID, which is no coincidence at all, where literally the Fed was printing $1 trillion a day just to smooth over what was called the repo market crisis. And at this point, we're actually all the way down on number 6 on this list. We now have the reverse crisis of what basically was created a year and a half to 2 years ago when all that money was printed. Now we have too much liquidity and not enough bonds. And those who tuned in July 7th may remember that there's actually a conflict between number 6 and number 3. Number 3, which actually entails not creating bonds, whereas number 6 entails creating more bonds. So there's a total conflict here between number 3 and number 6. Literally, the Federal Reserve right now has its back up against the wall. They need to go into a reset, and they are designing it to suit their purposes, to take power from the little people and enhance their own power. And we're going to go over how they're doing that today. So, since we just covered number 6, which was the withdrawal of monetary liquidity, I want to make sure that our listeners actually see that in graphical form. Neil, let's go to slide number 7. Now, a lot of people look at this chart and they see this incredible surge over on the right in the modern day. And people sometimes make the mistake of thinking, okay, that's a lot of money printing. No, it's not. This is a chart of reverse repurchase agreements. Literally, this is the Federal Reserve racing at all-time record rates. Nothing in history approaches this. At all-time record rates to withdraw money from the financial system. They are pulling money out, and they are creating the bonds within which to put that money. Now, the end result of this, when you pull money out of the financial system at a record pace, you're making money very, very tight. The end result is that small business and real estate lending gets tight, and that's exactly where we are now. If you know small business owners looking to get a loan right now, it's tough, and it's the same thing in real estate right now. So this is not a good sign if you're thinking that markets are going to continue advancing. This is actually making things very tight. So let's go to slide number 8, Neil, and let me show you guys one more aspect of what's being done to our money by the Federal Reserve Central Bank. And here you see money supply growth. So it's the growth rate of the money supply. Now you notice back in February of, earlier this year, February 2021, you can see that the growth rate had hit an astonishing 27% annually. So they were growing the money supply at a rate of 27% per year. But what happened after that? After February, it has plunged. The Federal Reserve has cut the money supply growth rate by over 55% since February. Now, if you're financially inclined, you know that all the Federal Reserve has to do in a highly indebted economy like what we have, they don't actually need to make the money supply growth negative. They don't actually need to reduce the money supply. If they merely significantly reduce the growth of money, that's enough to throw markets in turmoil. It's enough to cause a crash. So what I'm letting the audience know here is we are looking at a classic pump and dump. The Federal Reserve cranked up money supply growth to a record 27% in February of this year, and then cut it by more than 55%. So they've created a bubble, and now they're pulling the rug out. This chart shows it. It's the validation of what my stock market crash indicator showed us a little bit earlier, a few slides ago. So that's where we are with those two things. And basically, the Federal Reserve is looking to reset the financial system. They have to, because of those frailties that were on that slide from earlier.
What is that going to look like? What is this reset going to look like for the average person?
At first, it's going to be a stock market crash. So if you have a 401k that is invested in a lot of mutual funds that are invested in stocks, you can anticipate a big plunge in the value of those funds.
Does inflation, because we know that inflation is getting pretty high now, it's record levels, food's more, fuel is more.
Last month it was up to 8.2.
Yeah. So is that all part of this?
Price inflation we're going to address in a few slides from now.
Okay.
It's going to surprise people. But yes, you're quite right. The price inflation rate is higher today than it has been in many years. And absolutely that is directly attributable to this ramp up in the money supply growth rate. This was caused by the Federal Reserve Central Bank. Absolutely.
Okay.
Yes. So they're going to do, the Federal Reserve is going to do this reset now. And what they're going to have to do in some way is take freedom away from the people. And we will get to how they're going to attempt to do that. And I'm talking about economic freedom here, not necessarily social freedom, although we do see that in the news as well. Yes, yeah, we see that. So the first attempt to cover up the financial reset actually was COVID, which is not working too well, because the level of fear here in 2021 regarding COVID is a lot less than it was in 2020. So essentially, we are now headed for this reset, and the Federal Reserve does not have much of a cover to hide a crash. They don't have an excuse. Basically, and this is what I'm hoping for actually, is that our audience and people connected to our audience will spread the word to take note of what's about to happen and to make sure to lay the blame accordingly. I know Biden has made some mistakes. I know that.
He has?
Yeah. Surprise. But Joe Biden is not the guy to blame for what's coming in the stock market or in cryptocurrencies or in precious metals or maybe some other markets down the road. The blame should be laying squarely at the foot of the Federal Reserve. They have created this crisis. They are now pulling out the rug, and when it happens, there'll be no one else to blame but the Federal Reserve. Yeah, we could actually...
Now's probably a good time to take a break.
We could do a break, yeah, and then when we come back, we'll talk about what the Federal Reserve is mainly going to go after
and
in
what we
this
can
reset.
do about it, if anything.
Yeah, what's their target?
Okay, well, Mr. DeSante, do we have something queued up there? There's much more to come, so don't go away.
Very
this
interesting
is
stuff.
really interesting.
I hope you're taking notes.
You should be, because you could stand to lose a little bit of money. See you on the other side.